This voice is taken from an article with the title, "What is the Impact of Trade Agreements on Currency Values?" which has been published on TraderTalks.net. Trade agreements have an impact on currency values, as they can affect the flow of goods and services between countries. This can influence the demand and supply of a currency, and therefore, its value. Trade agreements can affect the demand and supply of a currency in two ways. Firstly, they can affect the exchange rate between two countries. This is because trade agreements can reduce the barriers to trade between two countries, leading to an increased flow of goods and services, and thus, increased demand for one currency relative to the other. This increased demand can lead to an appreciation of the currency, which means that it is worth more than before. Secondly, trade agreements can also influence the balance of payments between two countries. This is because when countries enter into a trade agreement, they reduce the cost of trading between them, which can potentially lead to an increase in the level of imports and exports between the two countries. This increase in trade can lead to an increase in the demand for the currency of the country that is exporting more than it is importing. This increased demand can lead to a strengthening of the currency, as more people are now buying it, leading to an appreciation in its value. In addition, trade agreements can also have an impact on the currency values of the countries involved due to the increased investment in these countries that can be encouraged by the agreement. When a trade agreement is in place, investors can be more confident in investing in the countries involved, which can lead to an increased demand for the currency of the country. This intra-ASCD demand can lead to an appreciation of the currency, as more people are now buying it, leading to an appreciation in its value. Finally, trade agreements can also lead to increased economic growth in the countries involved. This economic growth can lead to increased demand for the currency of the country, as more people have more money to spend and are therefore willing to buy more goods and services. This increased demand can lead to an appreciation of the currency, as more people are now buying it, leading to an appreciation in its value. Overall, trade agreements can have a significant impact on the value of a currency, as they can influence the demand and supply of a currency. This can lead to an appreciation in the value of the currency, as more people are now buying it. Therefore, it is important for countries to consider the potential impact of trade agreements on their currency values when entering into trade agreements.